Doc. Sean Duncan with SMD Consulting and Accounting. All right, so are you a W-2 physician and you're wondering, how do I get deductions anymore? I thought they just changed the rules and took them all. Well, they kind of did, but let's talk about what opportunities you do have. First, disclaimers. Okay, so you're a W-2 physician, and we've recently done a video on the 3 categories of deductions for practice owners, and you're wondering, well, what's in it for me, man? I am going to tell you, it's not as good as it used to be, and it wasn't even great before that. So in 2018, the massive tax overhaul took the primary deduction categories that supported the W-2 physician. This was the itemized deductions, the unreimbursed employee expenses. It used to be if you paid for your CME yourself, if you paid for any supplies, anything else, you could write those off as an itemized deduction, kind of like you're writing off your property tax or your mortgage interest or things like that. They're gone. They don't exist. Period. They're gone. Now, what I run across recently, and this is kind of terrifying, is I've had some EAs. By the way, EA means enrolled agent. If we haven't talked about that before, maybe we'll talk about it more. That's an individual licensed to represent you in front of the IRS. That's not quite a CPA. Doesn't mean they're bad. It's just a different credential. So in case I say EA, that's what I mean. EAs and CPAs that have done this really, really wrong thing. They've said, well, I know we can't take them on the itemized deductions. They took that rule. So what we're going to do is we're going to list them on your Schedule C. Schedule C is the schedule for the self-employed business owner. They'll list all those expenses on there. Now, what's really interesting about this is on your tax return, those will create deductions, create a ton of deductions, and actually really, really helps. You'll make money back. The problem is businesses need revenue. Otherwise, they're not really businesses. And so this has happened multiple times where a practitioner has filled out that form, there's no revenue because there's no business, and they get the deductions. And then they brag to their physician and say, hey, look how much money I saved you. No, they didn't save you money, because really what's happening is when you get caught, not if, because this is something the IRS software can catch. This doesn't even require a human being. It's going to kick it back. You're going to owe all those taxes, and then you're going to owe penalties and interest, and then you're going to try to go back to that person and say, hey, you owe me money because you screwed this up, and they'll be in Europe and have retired. So don't fall for it. I want to give you that caution because I'm starting to see it more, and it scares me to death because it will cost you tons of money. And then heaven forbid you decide you want to get loans or something else, and maybe you're in bad standing with the IRS or have debts. It gets messy. So what can you do? I don't want to scare you, but I want you to understand what's happening out there more often as a solution to this tax law change. It's not a solution. It's kind of fraud, y'all. So what can you do? Well, one, you could actually have a business. You could actually do something. Many, many, many W-2 physicians will take on side hustles. Maybe you pick up a locums. Maybe you decide you want to do some consulting. Maybe you do professional speaking. Maybe you do teaching. When you do something that makes you receive 1099 income or compensation outside of the W-2, now don't violate your employment agreement. Don't want you losing your gig. But if you can, that matches up against expenses. Now, what you can't do, take expenses from your practice and your W-2 gig and write them off against your business unless it's appropriate. If you watch the video on the 3 categories of deductions, in the second category, I mentioned sometimes you're going to have expenses that you would have already had anyways that still apply to the business. Well, here's one of those examples, your cell phone again. I love this example because it's something that we all will have. We're going to have that expense. So if you have the cell phone expense, and that's what you use for the purposes of your W-2 job reaching you, it's probably the same thing that your new business will reach you as well. And the IRS changed the rules a little while back to where you don't have to allocate. Well, 10% goes to my self-employed and 70% goes to my family. You can just write it off. So there are ways that things that work in both categories that might help you out going forward. So understand that first. That's the first thing, is if you do have a business. Now, a lot of my physician clients love to invest in real estate. We happen to specialize in this. We talk a lot about it in other categories. Maybe I'll do some webinars on it as well, or seminars or videos or whatever it is that interests you guys. There are differences between single-family houses, multifamily investments, commercial investments, fix and flips, whole different spectrum. But what's important about those is they might cause a deduction. It depends on your activity. Here's the biggest error a lot of physicians are making with relation to real estate. And we will do a video on this a little bit more. Real estate investments are passive. They're defined by the IRS as a passive investment, whereas your job as a W-2 is active. Passive losses, if on paper we make a loss happen, can't be used to offset active income unless you qualify for an exception. I'm not going to cover that exception today, but just know that it does exist. So sometimes your real estate investment could be a way to create deductions that create opportunities to save money. Other stuff is we can get into some advanced strategy. There's a lot of really cool stuff we can do for high earners as we get into charitable strategies and trusts and things along those lines. So know that those do exist. You have your basic stuff. And I don't want to bore you with the basic stuff, but put money in a retirement account, right? Make sure you're using a health savings account if it's available to you, because that can create some deductions. There's a lot of other very core blocking and tackling. Make sure you're not missing your itemized deductions. Holy cow, I've been seeing tax returns where they're not writing off the property tax. Now, if you own a house, you have property tax. I don't really care what state you're in, you have it. And so if it's not on your tax return, you have made a mistake, the end. There is just no other thing to it. Don't miss the basic stuff too. It doesn't even have to be fancy and cute. Now, there are a lot of other advanced strategies, and I kind of teased on it with the trust things. You really need to consult your professional to make sure they're legit. There's a lot of people that are out there selling things, conservation easements. If you hear that term, run. Just run. If you hear conservation easement, there are way too many people preying on physicians and telling them it's a tax deduction. If you want to be audited, that's the way to do it. These are so abused and done incorrectly. If I consult a client or offer the service or support in the conservation easement, my insurance company might deny my coverage. Think about that. If I help someone else with this thing, I am kind of in trouble. Don't want to do it, guys. And there's a lot of other stuff that's out there. There's gas station investments and oil and gas investments. It doesn't mean they're bad. They are out there, but they're basically business investments. They're sometimes passive and they're sometimes active. That's why I told you about the real estate version, because there's these balancing acts on what the rules are. So if it sounds like I didn't give you a ton of let's do this and here's what I need to do to save taxes, as a W-2 employee, yeah, they stole a ton of it for you. And this is why having self-employment really, really helps. There's not nothing. It's just so much less than it used to be. If you want other ideas, obviously we can brainstorm them because everybody's situation is very, very different. If you've got questions, of course, reach out to us, or reach out to your professional to make sure you guys are proactively looking for deductions. So hopefully today was helpful, guys. I know it wasn't the greatest of news because the laws did change, but hey, maybe we'll have another tax law change and we'll just adjust accordingly. Thanks, y'all.